Breakfast Club. My name is Darren Hancock, and this is the ThetaWaveTrader. Welcome, 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 everybody. Let's check out what Wednesday has to bring us. All right. Let me see, and let's put us all on the same page here. There we are. Alrighty. Okay, we're live. Let's see what. All right. So we're looking at this candle to the right, to the left here. Traded above it, come back down. We went through the mean threshold, so we aim for that discount inside here. This is your premium you're aiming for up here. We get above that 501.5. Literally on it right now. Get above there. Wait for that to close, and you're aiming for first one. Overlappers right there. There's a close above this level. Retap. Continue going higher. Looking for your first exit, second, and then wait to see if you have range extension. Hadi, I don't know if you're watching when we were talking about this one last night. Remember I gave you this box here, you and Russell. I gave you this box to be careful of. See how we ran into it multiple times, and then we had that huge run back into this discount box right here. So when you're calling for a run higher, always look at your that level that supports going lower, or if you break through it, it supports going back up into that higher range. So see how that box is perfectly filled? And then we retraced all the way back down. Huge run back into this discount array. And we just keep working it, and we still have not broken through that level yet. So let's see if we can get through there. All right, so now we've got a body. This little, that's a body there. It's still not above that level. Still not above that level. So lots of wicks poking up there. We still have this guy down here. This is way into the premium portion already. So unless you're using this one as support to go higher, with your stop loss just sitting below the SIBI, as soon as it takes that high, pay yourself, move to break even, go risk free, and just let it run now. See if it goes. Coffee over here. Good morning, Hadid. Good morning, good morning. We're just banging on the top of these here. So not a strong run higher yet. Lots of wicks getting up there, tempting people to go higher, and you've had this take out the high, and you've got this reverse going on here. So if we start trading back below that, then this becomes the little market shift back into this range, aiming for this box down here. Don't forget, it hasn't been tagged on the side, the little structure break, and it has not had a CAN Model 1 hit yet, and has not had a retest of that civvy. And it's being held right up in here. So don't be afraid, don't be too surprised if it decides to come all the way back into here first before finally running up to that level. We have not got a body above there yet. And watch this level right here. It's got a body literally opened on it. We're already starting to wick through. All right, let's have a look at some of this other stuff. I'll put it. Oh, I forgot to say. Okay. All right. Yes. ES doesn't have a body above here either. So watch out for your bull trap there. That's a 15-minute chart. Dow Jones finally took out these equal lows. Crude oil, I wanted to see if it would get below this level, and it did. And then we went lower, and then you got to watch these levels. If it starts to trade back through them, then the potential is to run higher, and then we want to watch to see if it trades through the next candle to the left, which is this guy here, but not really giving us a swing. So we'll go to the next one level here and use it as the breaker. The body trades above it, gives it a tap, goes higher. So it went lower, changed direction, back up to the premium box here. Let's see if this breaker holds, and we can start climbing back up above that level. Bold candle, find support, and see if crude goes higher. ES took the high. As in this one here. And NQ. I'm actually talking about this high over here. I don't know what high you're referring to right now. But, let me just finish this up here. Natural gas. Look at that quick reversal. We're looking for natural gas to go higher. It came back into that level, gave it a little bounce. I think you expected to see that go higher. Did not clear the highs. Traded through, tapped it, it went to the rejection block. And this, as soon as it starts to run through here, if your stop loss is sitting down here, that's a straight tag of your stop loss. That's a fair enough hit, man. It's a fair enough hit. So where are we headed? Natural gas taking a kick in there. Wow. Okay. Well, that will push us down into that. I expect to see this roll over and get back down into the level we're looking for now, this $13 area. Wow. So far, this holding price. Mom and dad will be happy with this. That's great. Gold is on the turn. Let's look at the DAX. Back inside the breaker, we have a reverse here. That low's been taken. Traded back into it. Now you want to see this get above this level here. So Ali and Hans, if you're watching, if we can get above that level now, on a close. Safer bet is above the high here. And then use this candle to go higher. Consolidation, a nice little displacement candle, and a tap back even to this high would be acceptable for me. And then run higher. That's got a distinctive clean out the lows, reversal pattern happening, so I like that for the DAX. If we close below the mean threshold of that candle, forget it. We're going to go back and revisit down here again. So you're right in the middle of this whole range here. So you're waiting for one side to tip its hand. And this has been that sweep from liquidity to take them long. All these guys who wanted to go long, quickly come back, take them out. And then we're going to take out all these people that wanted to go short. Got nothing for gold right now. Bitcoin. Just shy of that spot we're looking for there. Change direction. Swept the low, retraced. So if you're back inside this range right now, you want to see if this gets closed above or if we continue running down. Close this in and go lower, or see if this closes in and comes higher. Bitcoin. Patience is the word. Patience is the key. just pissing around with Disney. I just put 1 on there and realize it only gives you 10 cents. So wait for that to open. Oh, it's going to open lower. Still looking for these equal lows to get taken. And threshold's been hit. Forward, we're still expecting forward to come down. Little piggies right back into that order block. So you do not want to see this 106.95 get closed below. I wouldn't even want to see a wick get below that. If you start getting wicks and body get through that, then look for a run back into here. British pounds on dive. Wow. Yeah, you didn't get a chance to catch that one at all. This is a lower time frame. You could have caught a short off of here. That's on the dive. We're right through this discount box here. Right there. Ideally, you want to see that stop there and keep coming lower if you're looking for lower prices in the pound. The US dollar continues to climb. That one there rolls over and comes back and finds some support at this. Then we're looking for another run higher, which we've already hit this premium box. Wow, that euro sure did a turn. Everybody's taking a big hit except the Canadian dollar's not doing too bad. Like a third of a cent. Silver. Change. Okay, what we're looking for here is see if we get back through here. If not, this rolls over and takes this out. Keeps coming lower. Look for a new price leg lower. Where is this one headed? Yeah, this is the price leg. This is a huge price leg lower. And you should see this just start to find support off of here. I'd like to say come out just a tad bit higher. You have to include the imbalance as well, so that's all fair game in there. And we're in there right now, so see if it takes that low, gives it a little tap, continues pushing lower. Good morning, Chris. Always pay attention to NQ. That's the best one that matters. On volatile days or in seeking the strike conditions, MQ wicks can be devastating. Monday was an example. 10 candle. It's brutal. Good morning, Ollie. This morning's action can be often found or tricky. Size down. Take some profits and pay yourself a rejection box. Yes. Or in my case, avoid it. Good morning. Morning hours with all the news. It probably won't be here that long. Won't get everything settled on. We'll let everything. Yes, thank you for monitoring those biggies. Darren, what's your screen setup? I watched an ICT video. He said he has a full screen for the three indices together, one with 3 time frames on them, and one for execution. I have the screen in front of me has obviously what you're seeing right here. I have the hourly, the 5, and the 1. And on this screen, I have 3. So I have the daily, the 4 hour, and the 1 hour. So I have 3 on that side. And I have 3 in front. The lower time frames, the higher time frames are here. My personal stuff's over here. And I'll watch your comments and stuff like that on the screen above me. And then I have the conversation on the community channel over to the left on this screen above me. I have 4 screens. Morning, Joe back. So now you want to see if this holds here. Now we've swept the lows, we've got a change in direction. We've come back, we've given it a little tap. Now I want to see if this candle holds. This little box here. This box gives up. And I'm back inside the range. That sounds serious multitasking, yeah. I typically on Sunday like to set up my week, take all my charts and mark them up, clear them all out, and then mark them up. You can leave your new week opening gaps and new day opening gaps in there. I like this to go lower now. New price leg lower. That's right in the zone. Find support here, roll over. Now stop loss will be just up in here, above the mean threshold of this. So what that right there, the demand price, you don't even want to see it go above that. So you could even be right above there. Start wicking through it. I'm not interested in wicks getting through it. And you're coming into 9 o'clock. So we've already got a 9 o'clock swing already. I think I'd like to see that get a little deeper. What's that going to line up with? If we do go lower, 950. What's down at 950 I could enjoy? Oh, it's called a rejection block. Right there, 950. So the next price leg could take us right to the rejection block, and that'll take us to the bottom of the weekly new week opening gap again. So not that I'm trying to sell an idea, but if that's the next price leg lower, that's where your my expectation is for it to run. And if we just keep running from there, then I'm looking for 434. And it's the new day opening gap. Oh, yeah. Look at your 4-hour chart. And look at the new day opening gap down there. That's a good point. Right there. This is a key level. I would challenge you to find out why that's a key level. So you don't just not just handing out your answers all the time. Why is that level so important? So this revisiting it, not impressed. Out. Out automatically. As soon as it starts doing that, I'm out. See, we're back inside this one, right? So we have a conflict. You want to see it return into here, and then you want to see it clear that level. And all it did was just come back into that level to say, hey, look, I want to go higher inside that range. Wait for a body to finish closing above there. And there's nothing. See, when you hear me say typically look for the bull candle that is to the left of the reversal, notice there isn't any here. It's just up here. So look for 50% return on that retracement here. And then we come back into that candle, now that we've traded above it. I don't want to see mean threshold more than the mean threshold get taken. See how we're into wicking already? Don't like that. But as long as the body stays above there, keep coming, 50%, 62. See how we're looking for it to go all the way down and change it of idea. When it starts to work back through here, I've got a change in thought pattern. And that's one of the toughest parts for new traders to accept, is when you see a change in direction, you've got to be willing to dump your old idea and change up your mind. And even if you go to trade on, if you marry a trade idea down here and you see it turning on you, you're just giving up tons of your profit to your, the pain convinces you to say, I'm on the wrong side of that. Oops. It's good. Body stays in above. And there's 50% right there. So now you move to break even, pay yourself, and whatever losses you took going this way, you recoup them here, move to break even, you got a zero stress trade. As soon as it hits 61%, you've recouped your losses that you would have taken here thinking that was going longer, or shorter, I should say. So you got to be prepared to switch it up and have the confidence to do so. Otherwise, you just sit there licking your wounds all the time. Death by 1,000 cuts, man. So you watch the 62, then imagine we're going to move to 50%. So we're doing internal range liquidity hunt. So right now we've taken a portion off at 50, move to break even. So it comes all the way back down here and tags you out. Tags you out. You get a little piece back there. Now, if you're doing this the way Michael teaches you, and let's say you took a loss there, your next trade should be half of the leverage you took here. So you got a portion out there. So you got a quarter back, and you got a quarter left on now of the original trade you took going that way. Nice. That's some serious multitasking. Yesterday's price ran from 9:30 to 11:30 was perfect. 15-minute series, measuring cap, bang in the middle of it. I like this propulsion candle. Let's go. Let's get back up on top of this, get 62%, and see if we can't push for 70% off from trade entry, cam model 1, and then reverse, or continue to push through here and accelerate quickly through here. Take these equal highs and start pushing higher for this premium in the larger range here. So we'll keep it real. So we've still got half off for trade off there. We've got a portion here. And as soon as it hits 62% there, you pay yourself another portion, and then you move just under 50% here. The high on that candle is, it's a quarter of a handle from touching that. It's 90.75, and that's 91. So we're still not there yet. You're still break even. You still have a portion of your trade off, and we're waiting for that to accelerate through here so we can move our stop loss to here, lock in some more profits. And it's a stress-free trade right now. And let's look, let's mark up our charts a little bit here. What's our 8:30 HD candle? 30 right in there. Oops. That unfortunately puts us right on top of there, so it'll take you out. And then you want to see that go higher. If we sweat the lows, go above it, come back, tag it, and go higher. It's an up close candle. So you want to see that come back, give it a little kiss, and go higher now. I think Hadi has his just as soon as the body trades above it, comes back and taps it, he's in for a long. Is that how it works, Hadi? Is that how you typically like to do it? You wait for price to travel below it, above it, come back, tap it, and then go higher. Okay. So you'd be in that for sure then for long, which happens to be right off of the level we're looking at here, strangely enough. So we're both lined up. He's using one technique. My technique is here. So either way, you're still long. So your stop loss then, Hadi, would be where? Just below here? I think you mentioned something about the candle that broke above it. Are you just below this level? Or are you looking at this BISI and saying, I just want to be below that? I'm not sure. What's your logic in here when you've got a BISI just below you? And if you look at the candle, if you want to be just at the bottom of that candle. So now I'm looking at this here, and I see there's a change in direction here. If we close below that, then you look for, it's about to come back and tag you out. You made a portion here. You're 1/4 below, taking a bit more profit and moving to 50% there. There, it would have tagged you out right there. So small little, you made half your trade, you took it off at 50%. So if that rolls over now and goes lower, don't beat yourself up over making a small little bit of money back. But recognize now that you're on the wrong side of it. It's changing directions, and now you're between here and here. You're in this small range right now, and or this right here. That smaller range, this immediate rebalance that we have here. See if we get a test on that. See if that was your at the bottom of your 830 candle, Hadi, that would be tagged. You have that BISI involved there, so if that reverses now, and that BISI, and you have it just sitting below the BISI, that would make more sense to me. Because this immediate rebalance, look at the candle to the left, and that whole candle, stop loss should be sitting down below that guy for a return into this. And I want to see that go higher and get back through here. So I would incorporate some depending on what you cut below you, as safety measures for this candle and that candle. Let's see if we can get back above here now. There's nothing worse than taking omega-3s, which is essentially fish oil, and then they finally dissolve in your stomach and you burp. It's like, oh. Coffee and fish oil. Gotta love omega-3s. It's a good thing this isn't a smell-o-vision show. Burp. Okay, that was 20-point drop at 810. 808. What is a 5-minute doing? Oh, yes, this looks like a dropper down now. 5-minute is right off that. That's ready for a run. That right there is hitting right off that 5-minute level right there. Do you see that? Let's make this bigger for you. That's a nice little retest of this level. Look at that right there. Bang. Now I want to see that start really smashing it down now. Sorry, Hadid, that's not going higher right now. That's going down. Let's see if we get this one right here. This might play an important role a little bit later after we run out some key levels and then come back to that level and look for a run higher. What would you say the success rate of this projection for the day is a day? Is it a 60, 70, 80%? Have you done 100 times and then just take that, your percentage of how many times it worked and didn't? 10 times? What's your average? How do you figure it? Give us some deets. Darren, I share some pics about 8:30 setup on the Telegram channel. Yeah, go in. I think explain out all these key levels and kind of explain what it is you're looking at, what the candle represents, anything to look for in terms of potential traps that can interfere with your trade. Or if you want to keep it as simple as you can and just say, well, look, 70% of the time or 80% of the time, it works like a charm. So we've come lower, we've come back into this discount box, and now we're smashing right through this level. So let's see if we can get above here now and go higher. Alan B, good morning. It needs to take the London low. So far, we're still inside this range. We traded below it. We came back inside it. Now we come from box to box. We're showing you those levels earlier. Just tap the top of the box here. Now we're eating through this one. So let's see if we close above there in the next 9 seconds. We've already hit rejection block, and we've already taken the high. So that was the 91 level we're looking for the 62% retracement. Now let's see if that just rolls over here. See how we literally closed right on that level. We quickly ran the low. So if we come up to 50% of this wick and then roll over and come down, just trying to stay on the horse right now. Watch this 50%. See if we get a body above that. I'm between here and here right now. And so far, we can still get a run up into right there, 98. Oh, 98 puts us right back into here. Right into the middle of this CAM Model 2. If we get above that level, if we drive through this consolidation, then we're looking for higher prices. Look at that smash. No body breaks above here. We're still in it. Smash. Through this level. Now, difference between this level and this level, that was already taken. I'm going to reach for this discount box now. So that 5 minute was just tapping right on it. Ding, ding, ding. Now the regular trading hour gap right down to 456. Yeah, if you can build a fail-safe in with that, the D, there's, you want to see a retap of this, not drive through it, retap of that level, roll over and come back down again. This is where that whole 930, 1030 crap, where you get these wicks doing a little more damage than we expected, but that was like 50% of this wick, so it's right on the money there. Body staying below here, and I want to see that roll over and come down. Let's take this out down here now. London's low is at 462, and then the 456 for the regular trading hour gap. Got a body below here. Now I want to see a retap at this level. Now I don't want to see that go a little higher than that. Get back inside this again. So we tap that consequent encroachment. Okay. A little higher than I thought, but there you go. Now we've just, no, not quite tapped it yet. What is this? There we go. Now look for the 456. That's done. Looking for 439. If we can get below 455 on a close, then we're going lower. If we don't, we need to close below 462. 462, then 45. on the hourly. Check out the hourly. You've got this discount box here. You start getting through that, and then the mean threshold of this candle coming lower. We're running for this wick here, 50% of the wick, and then lower. Right off the rejection block at 50. Look at that 50 level. We're calling for 50, and it just smacked right off of it. Look at that. Look at that return. All right, now at D, you've got your low, your London lows taken. Now you want to see it trade above this and tap it, right? And then go higher. Now, the question is, do you wait? You just trade the 830, or do you trade the bull, the breaker first? It comes back up, trades back into the breaker, and then taps the 830 to go higher, or do you just use the 830 and you ignore anything on the left here? Like, it's just an 830 price point, or is it in conjunction with a breaker? Good. Okay, so we wait for the breaker to get taken and use, hopefully see it come back and just kiss that 830 candle and go higher. That's our strategy this morning. That's my strategy. I'm going to try and work this one with the IHD. There we go. Gonna run above. Now we're going to see a body get above this level, I assume. Don't panic. The next one it clears, so now it's cleared all of this. If that continues to go up higher, look for this over here. We're not going to make our way back down here. It depends if that stays in a wick or not. Watch the next 16 seconds. Let's just run out that liquidity here now. That stop loss and your your enter is in here or here, and then your stop loss should go below. I think it should go below this first presentation fair value. Yeah, like down in here. So we've got a body close below that level so far. We're looking for a retracement back into here. If this continues to push higher, then I'm looking for this here. The 5 minute, we've gone through this, ran down, cleared out liquidity. Now run back up to this premium box. That's going to go higher at 511. Gotta get through these boxes next. Okay, so we're waiting for it to get back to 830 here. You may just tap these old highs and go higher and leave that open. But we're just going to wait for 830. To me, that could just stop right there and start marching higher. We never get this. But we're going to patiently wait for 830. Oh, you took a long, so you're not waiting for your 830 then. You're just waiting for this. So we're not doing an 830 entry now. We're just looking for this. Okay. So that was the entry. Gotcha. So the 830, you don't always count on an 830 then. You still go to other stuff as well. Okay. It's a selective entry point then. I'll let you explain your setup. You do it on weekend. I'm probably not giving it the justice it deserves. right there. That's only 830. My stop loss will go just below there. I waited for the 830, Eddie. So we'll see if it takes off from here. I've got a change in direction. So now I'm going to move it right to here. It's going to be stress-free in case that turns on me now. So we bounced right off, but through that 830, and now I want to see that run higher. I'm just trying to stick by one set of rules that I thought was for your 830 today. So we'll see if this closes above here. And the fact that we've got just a candle that's slightly closed below that makes me want to bring this to break even. So if that one closes in the next 6 seconds above there, that's a little buffer for me. It feels like it wants to hold that now and continue pushing higher. Then I'm looking for these main thresholds to get taken. So now we've closed above that level. So I've got a close below it and a close above it. I don't want to see this waffling back and forth crap going on here now. You want to see it just come back, give it a nice little fill, now push higher. And the potential is for it to come all the way back down into here. You have to include all of this. So far, so good. Now what's your main threshold? And I still can't play with that button, so I'm just going to let this sucker run now. I'm going to pull up to here. We've cleared the rejection block. So I would pay myself there, which I can't. So I'm just going to make sure I keep jumping this up behind the back end of it. So the next thing is I want to see this candle get taken to the upside. Then its mean threshold becomes important to me. So I'll move my stop into just below it. And I want to make sure that I don't lose that now. Still no candle above that high yet. I've got a little wick up there, but I want to see a body get up there. And we've already come back and rebalanced this. So this now candle here, we now have a body that closes right on the high of it. So this candle's been validated. So its mean threshold becomes important. I don't want to see its mean threshold get traded through. There's a little unbalance. That's the wiggle room right there. It's through. I'm out. Oops. I'll move my stop loss to here now. I couldn't get out. I clicked the wrong damn thing, hit my take profit there. Now I'm out. Too much waffling for me. A retest. Now this could be, this is what I used to call the old buffering. If that comes back and taps that one more time, I'll do that same trade again. Right there. Stop loss will sit down in here. If I can get back to that imbalance right there, I'll move to break even. I used to call this buffering. So it's just come back. You run back up into a range, you're expecting to see some points. It doesn't give it to you, so you just come back down, start it again. You've taken a small bit of profit in here. No, I don't want to see come back there. So we're risk-free again. Off 830. Too much chop here. It's becoming high resistance. So I want to, it's got to start accelerating out of here, which I don't think it's going to do for a bit. So there's the mean threshold. Pay yourself one there. Click, take one portion of that off. Maybe just below this mean threshold now, because we've cleared the high of it. So this, I'm between this candle here now and this one. We're above that mean threshold now. That's good. Now let's start pushing. Push, push, push. This is really fighting inside a consolidation here. So if we can get there, pay yourself a rejection block. So I'll be down to one of that little imbalance now. Use that for support to go higher. Take out those highs, you pay yourself again, and we're going to move into some deeper profit. So the London high should be up here around 525. Okay, so now I'm moving right into just below this level right here. It hasn't been tapped yet, so just the way the wicks are doing some damage. If it comes back into there, you pay yourself there. So that trade there, 1, 2, 3, or just leave the 2 on, let the 1 run for higher liquidity. Now I'm looking for the reversal. Now we've taken out a high. First thing you look for is this right here. So if we come all the way back down and fill that in, not good for me. I want to see a institutional order flow entry drill right there, a tap and go, or no more than mean threshold or consequent encroachment of this. If it starts to come back through there, my stop loss is there. I don't want to see a complete fill. So now we're up there. Let's move this sucker. Looking for that there, London highs paid. Move yourself into more profit. There's a new fair value gap, so this one's ignored now. I'm looking for this one. This is the fair value gap. I want to see it come back and tap and keep going higher. It's this guy here. We've got above it. Now I want to be just below that because I don't want to see that come back through this candle. If we can get above these ones, then the stop loss will go just below here, body above them. I'll use that breaker for support. So all the things we look for to get into a trade, it's the same thing you're going to look for reversing directions. So we can get this run all the way back down to here. It can probably take me out if I'll put myself right there. That gives us this order block. Oh no, I can be right here. Just below there. That's fine. I'm out now. So we'll see if that goes higher. That order block, we just tap below it, so, and we're already through that. So I'm good with that. So you pay yourself, you can pay yourself at that London high that we're looking for there at 525. That would have been a nice perfect exit up there. But we only had 3 on, so we're tracing it on the way up. So now highs have been run out. London high's been slightly popped above, and look at that reversal. Aren't we glad that we had that sitting right there now? Now if it comes back and taps that again, let's do another buffer. So we got paid to here, we got paid to here. If we do that again, we can buffer this one more time straight off that level and just start buffering it into here. So that would be nice if it would have come down, tapped it. Then you look for this right here because we could drove all the way through it. Now I want to see this hold price to go lower. See how we tapped it right there? Now I want to see that come lower. So now it's off the table for me. If we come back through here, this isn't a tap and retest. That's already been retested. If this had come here, that retest there would be a pay yourself, move to break even, and see if it goes. And if it doesn't, then it'll come back through you and look for the discount boxes down here. I put something in Coach's Corner that might help anyone that likes to trade the 9:30 open. Ooh, thanks, Ollie. Thank you for that. So that's a short. Now I'm looking for this to come lower and sweep these lows. I want to see this eat right through the 8:30 candle and start digging into this first presentation for value gap now. Entry here at 502. As soon as it takes that low, break even, pay yourself some here. You've got your initial presentation's been hit now. Pay yourself. Move your stop loss into 50% of this here, just above 50%. You got paid below here, paid it here, and then you want to see the rest run down to rejection block. Because there ain't nothing else down here now. You just come back inside this fair value gap and move it from here to here. Look at that, right in the perfect fill. Box to box inside this larger range. That's my box to box trading right there. Now, if you want that to go higher, it's right off that 8:30 now. It should rip, but I think we're going to keep coming lower now. We'll wait until we see this get closed below. If we get closed below that level and the first presentation fair value gap, when we come back up inside it to the top of the first presentation, and then go, I'm looking for this to go lower. It still feels like on a higher time frame it wants to go lower today. I have no confirmation that wants to go higher just yet. This just keeps telling me it wants to dig down lower. We got to clear that level on the 4 hour or on the 1 hour for me to go higher. Otherwise, I'm still looking for this to go lower. What's a 4 hour up to? Yeah, we're still inside the new week opening gap. We're stuck in the middle of the new week opening gap right now, banging around on high to low. So, and we're in the consequent encroachment of it. So we're in the middle. You can argue both directions, I guess. So we're playing between this one here and this one here. So for this is supporting price to go higher inside this range. I've got a 5 minute that says it wants to go lower, and I've got an hour that says it wants to go lower. So for them to all get back in sync, we need to see this level get taken on the downside right here. All this needs to get a nice bold candle through it, and you can get some wicks back into it. I'm fine with that. Then I want to see that main threshold get taken, and then we're back in sync with all of them wanting to go lower. Today's daily hit the rejection block on the daily, and we're not come back. We've only come into that daily volume imbalance just once. So, and we filled it once. So to me, if we come back through today's open, which is 453, that's today's open down here, 453. If we tag that, roll over, find support at it, we're looking for another run down deeper into that volume imbalance on the daily. And then potentially today at 403, what's the high? Open is 402.25. That's my next level, 402.25. 402. Right there. Next downside objective on the daily chart. If I had my druthers, I would be looking down here. See, this discount box has been worked right in the consequent encroachment. Now it's starting to dig through it. We've whipped through it once, twice, and we're just drilling into it right now. Just imagine this is a drill. That's either going to hit pay dirt and shoot up, or there's nothing, it's an empty well, and we just drop straight down. Drill, 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 drill. Now, do we strike oil and this takes off? Or do we keep eating through it? And then there's nothing there and we just drop down quick. See, we're through it already. Wick. We're through that level. Look at this level now. Look at that. Below, or right below the right first presentation. Come back, give it a kiss right there. I'm going to go short there. And I'm going to put my stop loss just above here. It's wrong. Again, mean threshold starts to get eaten through, then wicks are going to do the damage and take me out. Otherwise, that level's been closed below, so all the support, I don't want to see it even pop through that. Just come back even right into here. Oh, I guess you can get there. Should just give it a little more room to breathe. The wicks. See how that just popped through there? Don't like that. Don't like that. Into that guy there. We're above that level now. I'm going to pull this in tight to here because I've traded above that level. Come back and give me some out if it comes back to that guy right. If we get above here, I'll close it out because I think it's just coming back in to retest this because we're above it now. So I'm just trying to cut my losses. We're back into this. I'm out. Cut my losses. I'm just going to go higher. So I tried to sneak it down to get back to my entry point so I could get break even because it traded above my level. So this candle was that chase it down, cut your losses. But you see we've traded above it, tap it, see if it comes higher now. Too much chop in there. So now you're going to stay. Once you take a loss like that, then you got to wait for a market structure shift because you're stuck in the middle of some chop. You're above it. Now you're all the way through it again. Chop fill. Stay out of that. Because if you just keep trying to catch a ride every time it breaks the high or breaks the low, this is where you can get chopped up and your profits just get eaten away at. Look at that first presentation. In hindsight, I probably was acting a little prematurely when I got in here. Should have waited for a body to get below this level, like I was calling for. You want to see it get a body below there, and I jumped the gun. I got below this one. Wanted to get in here when it retraced into it to go lower. Then it went above. So wait for a better break below here. Wait for a body to get down here. There. And I'll come back and give it a little tap. Now I'll go short. Stop loss has to go right here. Above this. That. Retap this. Let's roll over now. Right into that. High resistance, not clean entry for sure. But we'll see if it comes lower. Looking for this rejection block again. And then looking for the new low here. This time we'll put a way too much running back through here. Don't like that at all. And it's 3 levels of potential retesting. So There's that first presentation again. Yeah, I'm still short. So, are you still short on yours, Hadi, from up here? Are you long still, Hadi, or are you short? You're calling for it to go longer. Are you, so you're long. Okay. Oh no, you're short. Okay. We're in sync then. Talk about trading at high resistance. This will get you some stress. I have no live money in this trade, by the way. This is just all demo right here in front of you. So my stop loss is up here. It's pretty much close to my fail safe. My fail safe will end up being this here. If I trade through that on a close, I'm out. We've already worked through this guy. So I'll close that out if we can get above that first fair value presentation again before it takes my stop. And that will probably still end up coming down here, but well, there you go, that's out for me. I don't even like that. Close that. High resistance, no fun. So now we're back through this level. See how I've closed above it again now? Targeting this. If we get above here, then we're targeting this. Come back, give that a little tap. Right there, and I'll start going higher. Joe Max says I'm long. Good idea for here. Not such a great trade as well. Still high resistance. So you start getting through here, Joe Mac, then I'd be like, yeah. You're going long and you're coming back into this level. It doesn't make sense to come back into that level. It does make sense to come back to here though. At 493. There's 493. Now do we eat through that level? There's an immediate rebalance here at 498 to 503. So targeting here. In the lower time frames, the higher time frames gives me the immediate rebalance. That's confluence there, and that's mean threshold of this candle is 500. So we've got all three time frames that have an upside limit inside a range, order block, immediate rebalance, and then if it gets up on top of that, then I switch back to the original idea Hadi had about going longer. I start switching up again here. So right now we're long inside this range. So here's the first indication. That could be the second indication. The final indication for longer is here. So you're watching it unfold here. So we're seeing a change in direction right there. We said we wanted to see it go higher, and it's going higher. So when you catch this at a very early stage in the 1 minute chart, you can get out of your trade early and start to say, all right, now I'm going back inside this range. Do I get confluence? I'm going to run above here. If I run above there, then I'm looking for this hourly box to get traded through. we said 500 was the bottom of the immediate rebalance. The top of it is right here. What's the open? 508. It puts us inside our, just above our busy here. If you're looking for internal range liquidity hunting, if you took that trade there and you went to 50%, take half your trade off there, move to break even, it just came back and tagged you out. You made a small portion there. So if this reverses here now, closes below that, then we're looking for another run back down into here. That's an internal range of liquidity. That's why you always use CAM Model 1 for, it's really the safest way to protect your money. It's the CAM Model 1, 50% retracement. It hits that, pay yourself, take half your trade off, move to break even, risk free, and wait. And if you, as soon as you see if any one of these highs get taken and you see a fair value gap forming in here, watch that level. If it gets traded through, then we're looking for another run back down deeper into the range. And from here to here, you can already see that that's 62% already. So we're right back into that first presentation again. So we went higher to go higher inside the range to 62 or 50%, just into that little premium level, dipped in there, which is right into that little level we're looking at right here at 500, and then roll over. So we're really just retesting this premium inside this range here. Now I want to see us come back and retag 468. I didn't see this one down here. I should have actually marked it out. That would have been an objective to reach for in here. 468 puts us right at 468 right there. So that would have been a nice little tap at that level. Pay yourself there and wait for us to break through that on the hourly now. So you want to get through 463, which is the mean threshold of this candle. I'm not nimble enough to trade this. I get frustrated by the lack of follow through. I'm out. Have a good day, guys. No worries, Joe. Small profit, choppy. We'll wait for A+ setup. Good morning, long time. I hope your trip was amazing. Hi, Dave. Yeah, it was great. Thank you very much for asking. It was incredible. It was awesome. How's everything there with you? You've been a pretty busy guy lately, hey? Hit the like, support the channel. Thank you, sir. Thank you, Ollie. Appreciate it. Now retest this level. A nice clean thing would be to tap that and see it snap off of here and start coming lower. We want to get through this 463 level. I want to get through this mean threshold here. See, not clean, hey? You have this level up here, hasn't been tapped yet. So if you're looking at chop skill, look up there. Came all the way down to rejection block. Did not take out the lows, creates the equal lows. Now comes all the way back up to premium. And people are going, oh, it's going here for sure. Rejection block. Pay yourself at rejection blocks. And this is high resistance, so don't bother trading this. I'm not going to trade this anymore. Otherwise, I'm just giving you bad examples of high stress, and you don't want to be in that. So we're just going to study the horse, ride the horse, and just watch it. So you want to see this hold. Three overlapping levels here. And there's a raise above us, below us. We just, nope, didn't quite tap it. Let's wait, Hadi. Let's use patience. Spritz, man. Just wait. I like this. The guys are using all the tabs on the channel. I like it. Commodities, indexes, sidebar, coach's corner, general. I like it. I like it. That's why I paid the extra to give you guys more tabs to get specific conversations going. So it's nice to see you guys using them. It's not just all under general. Yeah, it's hard to play inside this mess, man. That key level on the hourly is important for me to get through. Otherwise, this level here, where you're really stuck inside this range between that level and that higher objective. Remember, see that bear trap or bull trap we're talking about last night? That order block? Look at that order block. Remember I was telling you, watch the order block? You got to get above that order block to see any joy. And then there's that little box above that you want to see it rip through, come back to the box where there's order block and then go higher. And look at it, just ripping right around in there. Bang, bang, bang. So it's back and forth between two critical arrays for me. Bang, 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 bang. It just keeps going back and forth. So we've had a wick through it and a wick through it, which says, where are we now? Right in the middle of the two. So we're in like between those two arrays. We're like in the, what does he call that? Event horizon. Sitting in the middle of it. And we're also sitting in the middle of the weekly new week opening gap. Right in the middle. So it's one of those don't stress out days and just wait for something to break out of here. My little guide helps to spot these conditions. Ooh, thanks, Ollie. I can't wait to read that. That's in Coach's Corner, you said, eh? Thank you, sir. I will definitely look into that. And now we've hit that premium box inside this range. Premium. There's a discount box right here, which is overlapping the first presentation fair value gap. And it's also overlapping this old one here. So that cluster of three has to let go, and these lows have to get taken. Well, that's doing its dance. Let's go look at something else. I'll be happy to give you comments on it, Ollie, if you don't mind. I don't like sticking my nose in other people's strategies unless I understand what it is they're trying to do. But sometimes as things start to unfold, I have more questions than. So it's the same thing when I used to teach emergency services. you should have, I usually used to write on the board at the beginning of the class, I'm like, welcome to the class. I'll be your instructor for the next 4 weeks, 6 weeks, whatever. And then I write this word why on the board. And I said, you need to ask this question over and over and over again. If you don't know why you're doing something, you're dangerous, right? You're uninformed. You're just following an algorithm. You're just following a chart without thinking, without critical thinking. So you must always ask why. Why are we going there? Why is it doing that? If you can't justify why that decision you just made, you go, I don't know, I'm guessing. I'm hoping. Hope does not enter into anything professional. So you got to be able to ask why, and you got to be able to answer it. That's why I like for Hadi to, he's going to answer all his why questions. I'm going to throw why questions at him. Why would this happen? What would happen if? And you'll go, well, here's why you want to put that there. It eliminates that what if scenario. That's why I developed the fail safe. The fail safe is that one point where you notice that price is changing direction. If you see it break that point, that data point out, and then it's up to you to have the conviction to follow through with that fail safe and get out before your stop loss gets taken. And sometimes you need your stop loss to get run enough times to go, I knew it was that spot. That's why you demo it, you practice it. And if Dayton isn't even still looking at this, I haven't seen him in a little while now, that's why you don't even do demo trading. You just mark up your charts like I'm doing right here, and don't even bother hitting those buttons, because that's a whole new psychological thing to study. They're not just simple buttons. They are the next level of your learning in trading. And that's all you. It's all you. When you start getting into this, you start playing the you, me and you button. Me being me and you being me. A whole psychological setup. Because now as soon as you hit that, then you start doubting everything that you've studied here. You start going, oh, what if, and you start going, oh, money, money, money. Oh, it's heading for here. I'm seeing money now. You're seeing these other things pop up there. And it's a whole new different psychological game. So that should not be entered into your study when you're young or you're starting out. There's the premium box inside here. We traded above this level. We've come all the way back in it, wick through it, but came all the way back into it. Look for range extension. We have range extension. What's our next objective? It's right here. Now, if we start to body through that, look for a mean threshold, hold high, and then we're starting to run back up into here again. We're already through the mean threshold of this wick, or the consequent encroachment of the wick, and we're up into that premium gap up here. So let's see if we get a body through here now. Or does this just go back into more chop and run back down into this level again? Highs taken, look for this right here. That's where your eye should go right away. There, go to here. As soon as you've taken that, you got a fair value gap forming in here. You're looking at potential market structure shift if we go below here. So you're already anticipating where price could go and change direction. So if you're in this for a long, let's say you were in this right here for a long, you're looking at that and you're saying my stop loss is going to sit here now that I've taken that out. I'm above my trade. I'm risk free. I'm into this rejection or mean threshold. As soon as I tap that, I'm paying myself. I want to see this tap here now, and you don't want to see it get below here. So where your stop loss is sitting on this one, you want to see that turn into a fair value gap. Then you can move your stop loss to here because you don't want to see that get taken now. Go, go, go. There's your mean threshold. Nope, you're just shy of it now. 513, I think, is right there. Now pay yourself there. Move your stop loss up into here, and you're waiting. So now you're in profit, and you're in profit if it comes back and takes you out, and you get into risk-free real quick. Does that make sense? Do you guys understand that? So now we have range extension, rejection block, pay yourself at rejection block, move your stop loss up into here now. Because that mean threshold, you want to see it come back into the mean threshold of this candle, find support at that, and then go higher. It's retapped an old one. That's fine by me as well. But I do like this mean threshold. So we'll see if we get that tapped right there. See how sensitive it is? It just tapped it, backed up off of it. Now, is it going to drive back through it? Or just use that to launch to go higher and leave this piece open? Institutional order flow entry drill. Oof, no, ran through it. So now your stop loss right there, you're out. You've paid yourself from here, paid yourself a rejection block, and now you see why rejection blocks are again perfect. Now see how we've got a change in direction here. So if we close below that, come back into this, we're back inside this range again, and you paid yourself on all those key levels all the way up, and then it reversed on you, and you pay yourself there. Like, oh man, come on. How lovely is that? Come back and retest this now. Now let's go. Get out, get higher, and stop above this level here. You don't want to trade below that, because now I'm between here and this. And this is basic ICT stuff on those critical data points inside the candles. See, now we've traded below it. I'm not in this long anymore. All the time I'm trading below that level, I'm back inside this range. So I look inside this range and I say, what's back here that hasn't been hit yet? And what is back here? Well, there's that premium level. That's got to hold. And then I've got to get back through here to confirm that I'm going to go for the next rejection block, hold high, 50% of the wick high. Hadi says, I'm back in 15 minutes. Does this make sense to you guys? Or am I being way too specific? If I'm being too specific and it's throwing you off, go back, study your ICT basic stuff like order blocks and what key levels are inside that order block that supports price. See how we've traded back into that level, going lower. If we eat through this, now we're looking for 50% of this range. Which is right there. So you enter in here. As soon as it gets to here, stop loss moves to break even, you pay yourself. So right now your stop loss is sitting just above here. If it runs through this thing on a close, comes back and taps it, get out before it runs for your stop. That's fail safe. So for me, in other words, if it trades through this level right here on a close, then it's running for my high. Right now it's just coming back in, tapping it. I want to see it come back to 50% now. Pay yourself 50%. Internal range of liquidity hunt. And you may not want to trade that. Maybe way too choppy for you, right? Which is fine. Want to trade here. I don't even want to see a wick get through there. That's it. Stop right there. Don't even want to see that. I'd move to the sideline. Stop that right there. I don't even like the wick. I suppose there's an imbalance right above you there too. Yes, there is. And we're through that already. So your entry in here, that's your loss. I don't like wicks. That's when I know it's getting super choppy and not being very specific, even through the mean threshold of that. It can come down all at once now. And if you're sitting there going, oh, if you would have stayed in it, you would have had some more money. No, you got to be disciplined enough to say, I don't even want to see that. I don't even want to see a wick get in through there. And if it trades down here, that's not the only trade, so I don't care. We want it to come lower. The wicks, we did not get a body above that level, but the wicks were enough to throw me off. But that's my rules. It may not be yours. You may stick with the, as long as I don't get a body above here, my stop loss is okay. That's my fail safe. Fail, no body, I'm good. I'm still good to go short. There's 50%, pay yourself 50, move your stop loss from here down into break even. So if you entered in right there, move to break even plus the cost of your trade, take half off. Internal range liquidity, next thing you're looking for is the 62%. And you'll move from break even. It's going to tap you right here. Right there, you're out. So you're going to make half your trade there, half your money, and the rest is taken out at break even. Quick way to move your stop loss, right? Because if that runs through here now, you see how people don't look at these small ranges as an opportunity for, see how the body froze right on 50%, just dipped into the discount portion of this and ran higher. Some people might say an institutional order flow entry trail off of this candle here. You see that? See how quickly it could have come back now and taken your stop loss had you not recognized those parameters that we looked at for precision. Now you're back in sync with going higher. So you nibbled, even though you're on the wrong side of this, you still nibbled a portion out, protected your money with the fail-safe, and then I would have taken a small loss there had you stuck with the original rule, which is the body didn't break that high, pay yourself, break even. Now you can get back in sync with the market going higher. Body broke above this, come back, find some support inside here, push higher. Welcome back, Hadi. Ran out that high, pay yourself there. So if you entered in right here, pay yourself there. Ideally, you pay yourself at the candle. That's next. Pay yourself there. Move to break even. And wait, if it comes back right there and takes you out, you paid yourself right there. You nibbled a piece out at a data point that it's reaching for. Now, if it rips through here and takes this out on the downside, you'll be glad you paid yourself at that data point. I want to see it hit right on 511. $511.75, right there, bing, hit it, now go higher. Right there, 521. So this would be a 10 handle pop. There's a little tiny gap there, see that? I move my stop loss to break even, plus the cost of the trade. Let it go stress-free and look for that spot there. If it comes back and gets you, didn't cost you anything. You're going off a specific data point. Now that might be too precise for you, which is fine. It may not be your setup. You gotta, if this is watching the horse, staying on the horse here, we're just riding the horse, see how high we can get this. That's my next points inside here. I'm looking for that piece. That's been hit. I want to see that. And then I want to see mean threshold of this candle at 521.75. Then I'm between that one, and then I'm between back to that 507 again. This one's been tapped though, so that's the discount portion of this range. Now I want to see that go up to the premium portion up here before coming back down to the discount portion here, before running up to the premium portion there. So if we're going back and forth, once, twice, 3 times. If it goes once, twice, 3 times, no, yeah, I guess that would be here. Watch for the mean threshold. If we lose that, I'm expecting this low to get taken. Then that little swing point there. And I want you to see these things too. See how we got that run above that high? We look for the fair value gap, the BISI. But I also want you to see this. This, and then also right across from it is the SIBI and BISI. One wants to go higher, one wants to go lower. So when you're in this situation, now we got this mean threshold holding price. Now I want to see it start reaching up into this and that. If it doesn't and taps this and gets weak again, then I expect to see this give way and go lower. So you got to eat through this order block. Its mean threshold, aim for that little piece there and the mean threshold above. And we're back between one wanting to go lower and this one wanting to go higher. And they're overlapping now. So is that a key area? Yep. And where is it sitting? Right in the middle of that little small range there. So looking for that 521 right there. There's the mean threshold. So aim for that area, mean threshold to here. Now let's see if this rolls over and goes lower. If it doesn't and goes above it, look for that little level there to provide support. Now before it takes the high, you want to see it come back into here. 520. And not just coming to rejection block, roll over and come back down to rejection block. Like to like. Nope, it's closing below that level. 13 seconds left. That's just a rejection block run. So now I'd like to see if this is just going back and forth between specific arrays, like rejection block to rejection block. You'd want to see this mean threshold give way and see us come back and tap that. Oh, no, we've traded above it. Give it a little kiss. Keep going higher. We're right on the mean threshold there. Body's still respecting it. But what you gonna do? What you gonna do when they come for you? Let's go higher, higher. I don't want to see a body get up here like this and then come back and use that mean threshold for support to go higher. If not, it's right there. It's holding it. It's a data point. See how the bodies are respecting it? Here, back to here. Good morning, Derek. It's a good idea to sit still on this, man. You get beat up at some chop today. So inside a smaller range between here and here, mean threshold. It's right there. I want to see that one give up and start reaching for this one down here. Otherwise, we're building a block. So we've got a building block. We come back, find support at it, create a new building block, come back, find support at it, start pushing higher and higher. Start climbing. See how the steps are starting to form here? So that one pivotal area is going to be, are we finding support at this and moving back higher through this mean threshold, back through that one? Or are we just giving it up and then coming back into mean threshold down here and rejection block? That one's been hit. This target is where I'd be looking for it as soon as we lose that one. This is holding. And again, you're not trading this, you're just looking at it and studying. I'm super sore. We've got 8 days or 7 days in a row to the gym to work out, and holy smokes, being 60, you feel the pain, you feel the aches and pains of going back to the gym really easy when you're 60. So see how that's holding still? So I'm really between this candle and that candle now. See how we're compressing? We're waiting for a break out of here somewhere. Oh, my wife's calling. She's whispering at me. Hey, buddy. All right, so good morning, folks. Been busy. Dealt some more EU, GU this morning, and added AU to that. Wise move, Derek. I'm watching, but no trades so far. Trading motto today: pain and discipline, not pain and regret. Pain and discipline. Oh, I like that, Wally. Yeah, I love that saying. Pain of discipline, not pain of regret. Ooh. I like that. As a matter of fact, I'm going to put that up there. I like that, Ollie. Thanks, man. That's a good quote. Always like midnight open as a target, especially when inside. So look at all these key levels that we talked about. Look at the consequent encroachments and that get hit. Traded through that level to the mean threshold, found support, mean threshold, found support, open. Let's keep going. So you see how we're building on these little steps, and you expect to see a continuation on the upside. But there's key levels that you want to see provide support there, and they're working quite well. And you'll also see right here as well. I'll just mark at the top of it right here, and the bottom of it will mark right. Clone this, put that right there. Look at it, just smacking away at it right there. Once we trade above it, trade back into it, look for support, push higher. Next ones will be right here. Trade above it, you can see it come back and tap inside this box. We don't want to see a body get through here. This right here, tap, I want to see that leave from here. Not even come back with a new wick. I just want to see that leave from there. There you go. Now come back to here at 253 and tap that. Nope. Back into the box again. More aggressive would have been just to tap this and go. We haven't retapped this. Once we've traded above it, we haven't retapped it yet. We have now. Now we'll see if that holds. This is a psych candle. What it's doing right now is working with your head. Now it's traded below it. If you're in long there, tap, get out of your trade because it's coming lower. Where are we inside this range? Go back to this one here. We're at the mean threshold of this candle. Again, we've just swept out these lows. So you want to see it get back above here. Mean threshold to go higher. Otherwise, we have a change in direction. A retap to go lower, or we pop through it, come back here, take the mean threshold out, and continue going higher. This is choppy, choppy weather. Hit this next objective. What's happening up there? Closed way above it now. Come back down its damage. To come back to here. I didn't see it. It's my bad. They're sitting right here. See that one there? Didn't see it. Now we got this one up. This is looking good. Now looking for a bullishness. Now you want to see that close up there on the hour, and we've got the macro beginning now. So you want to see this come back into here, a D, and now we want to see that go higher. Let's see where that closes. Oh, you are paddling in numbers here with this 2- and 3-word responses. We don't have a chance to become number one. CIA? Who's CIA? What's CIA? You padding your numbers. Sorry, I'm missing out. I don't know who you're responding to, Derek. Oh, I see how this is. You mean like the little crown and the number one is the number of times people have commented in the, oh, you get a little crown for being, okay. The little crown number one for the number of chats, phrases that you use. Got it. I'll leave you to play that game. Tap this old high. You want to see it start leaving from here now. I still think we're going to come back and give this little tap here at 522. That's the 11 o'clock, I think. 11 o'clock, retrace back into here, set the low, and start pushing back up into, oops, start pushing that back into 12 o'clock, make a high in here at 575. If we can get above it, look for a 14 level swing and then push higher yet. This could be reaching for discount array, premium array inside this larger range. So I will mark this out as the premium array. On the hourly. As an upside objective, and that is 556. This is all the new week opening gap stuff, or the midnight open range stuff. Yesterday, midnight open on yesterday. I never marked today's. Let's see how that's 1 o'clock or the 6 o'clock candle. There's a turn up. Market structure shift. Main threshold. Traded through. Back to it. Keep coming. Lows taken. See if we get through this breaker here now. Close. Just wicked up above it. Did not get a body above that yet. And that's 9 o'clock right there. We still didn't get a body above it. So 50% of the wick now. That puts you back in here. Roll over, come back lower. Want to see that mean threshold hold price, institutional order flow entry drill, see if that comes lower. Or see if we get back up into that 50% of this wick here. Retest this old low. Is that about 50%? Yeah. Retest this old low. If we get back above here, on close there, retest. Right. Go higher to get here. If we close back through that level again, I'm looking for this one here. 35 seconds. As I said, 25 extension of the opening range. An extension of the opening range. Of the opening range lies perfectly with the consequent encroachment of the 15-minute. 15-minute. Bessie? Yeah, that is 15-minute. Civi. $5.45. I don't see what it is you're looking at there on the 15-minute. That's the 1 hour, that's fine. Sorry, I don't know what you're looking at there, Ollie. Through that level, to that level, keep coming lower. All right, here's your 11 o'clock turn, hey? Let me clear all this lot out of here. Close out all my distractions here. Looking for this down here. I missed it. I moved the 15-minute open yesterday, except yes, it's showing no desire to go higher. So we're going to turn it back into the range. Yes, and we can do that at times, not quite get to the imbalance of liquidity. Don't want to be caught in that. If I do this, That's one standard deviation, 2 is way up there. Look for this discount box down here. I'm in long to 23,542. Oof. It's already turned up on you, Derek. It's changed up on you, my friend. Be careful. It's got to get back above here now for me to go long again. You got to change in direction here. It's got to get above that. And then this, then that. Clear that on a body. Use this as support. Start pushing higher. Otherwise, I think we're still coming lower. Extension of 9:30, 10 a.m. candle. Now I expect to see this whole price here and roll over and come back down. We're through the mean threshold of this candle. We've come back into the discount box. We've traded through it. Come back, tap it. Now I want to see this rush. Pick up some speed here now and get down into this discount box. Yeah, I'm too scared for me. I stay in the 5 in 1 minute and black out your screen when you're in a 1 minute. Yeah, fair enough. Nothing wrong with that. So we're through this mean threshold on the 5 minute then, Derek, on a close. And now we've come back up into old low. Now I want to see, does this run back through? You'd have to get back to this mean threshold at 525 to go higher. In a 5 minute chart, there's nothing even down here that really supports price other than this mean threshold here. That blue line, you want to see that hold price right now and then go higher. So you're between this candle right here, its mean threshold, and this candle's mean threshold to go lower or go higher. And you're right in the middle of the two. And the 1 minute just keeps telling me it wants to come lower. That black screen you're not looking at, it's not supporting here. If I look at your 5 minute, and I'm not trying to talk you out of your trade. You stick with your trade. Do what you're going to do, man. You're at 50%. You're banging on it right now. So you got to leave. You got to start heading out if you want to go higher. $62 will put you here. Put you back into that guy. Sorry, bro. Pay yourself at rejection block. Hold low. Gotta go higher now. Rip it up now, Derek. We've got our rejection block. I'd be happy with that. I'm still looking for this down here though. Be not afraid. Get out. Yes, taking a dump. Yes. There we go. Better light up that screen, Derek. Better turn that screen back on, man. I'm going to be like, Derek, look at me, Derek. I see you out there, Derek. Look at me. Uncover me, Derek. There we go. Now we've hit our discount box. I'm not going to harp on that because I don't want to rub that in. But uncover me. Uncover me, Derek. I'm watching you. Equilibrium of 5-minute current range. So we're already past that. Equilibrium is right here. And there's nothing down here really. I want to see, oh, right here. There's your 5-minute right there, tippy tap. Now if we start to eat through that one, mean threshold, we're going for the lows. Discount box. That's the lowest discount box I can see, which is the first presentation fair value gap as well. Now let's go higher, Derek. Come on, man. I want to see this turn around for you here, at least here. Are you still in it? Yeah, we're not looking at those until we get through this. The snap off of here is looking nice. So that's back into CAM model 3, or sorry, CAM model 2. Mean threshold of that whole range. You want to see this whole range here. 50% puts you right here, right on the bottom of the inversion. It lines up perfectly. Now I want to see that hold if you're doing a CAM model 1 or 2. If it doesn't hold, if you start to see it trading a body through here, close out your trade before your stop gets taken. That should be your line in the sand there. So you don't want to see that get revisited again. Once it's done it, you want to see it leave out of here. So confirmation is you want to see it, the SIBI get taken on the upside, find support. There's a bit of padding for you to go higher. Then you want to see market structure break. So you want to look for the candle to the left, which is this one. Market structure shift to see it go higher. Otherwise, that gives way. We're heading for the lows. So we've come back and tapped it again right there. Precision data points. Hit the low of it now. That's been worked. Mean threshold next. And when you look at this one, look at this as the candle for the swing. It's going to be the future. If we keep coming lower and we take out these lows and we hold off on the mean threshold of that candle, which is the look here point, if we bounce off of that, look for that candle. If this just ends up being down candles with a fair value gap in here somewhere. Oh yeah, I'm committed. Come on, Derek. I want this to turn around for you, man. Keep falling, baby. But we want Derek to come back and get at least break even. I don't think it's going to happen for you, man. There's 3 attempts to get down there. Derek's like, I'm not dead yet. A Monty Python moment here. I'm not dead yet. Bring out your dead. Derek's like, I'm not dead yet. Don't count me out. I'm feeling better. Come on, Derek. Let's go, man. Let's get you back here. We got to get through this candle now. Get through this and this. This could be the next price leg lower. Sorry, buddy, but this could be the MMA ground and pound here. Making cheeseburgers out of Derek. I used to pull for the number 2 guy, but I'm not now. Go D. Long road to my target. I don't know if I could do it in this heat. You're looking for 42. You're looking for up here, hey? Here I'm going to rub it in with a little Ollie religion here. No regrets. No regrets. Derek's like, screw you guys. It's turning on it right now. We're heading home. Where was your stop loss, Derek? Were you down here? Because you're on a 15-minute or a 5-minute chart, are you not? I just want to see where you fail. Do you have a fail safe? See how we're right back up inside this, but we have not closed the body above it yet. Which is working the whole new week opening gap. Just working it. Feels like I'm not thinking about it. It's all a state of mind. My failsafe and target are the same. Oh, Derek, I love you, man. Belief into existence. I like that, man. My wife fully supports what you're saying right now. She's like, just believe it'll happen, man, and it will manifest itself. Who needs a stop loss when you got belief on your side? Come on, Derek, let's get you above here, man. Manifest destiny. Destiny's child. So we could see a 12 o'clock run these lows and possibly take out 9:30's low and then do a reversal back into your lunch hour run for 542, Derek. So I'd expect to see a pop below here. This will get you right back into the rejection block with the next price leg. And then once you've got that, if we take out 9:30, look for the first reversal and then see if we can't start running all the way back up into that premium area again. We just had a wick up there. We still have not broken that upside hourly objective. That's why you don't jump on the bandwagon too soon in the hourly chart. You haven't got confirmation yet. And that really didn't hit anything other than this right here. No, it was even short of that. I was going to say this would be like an institutional order flow entry drill, but it's not till late. But, you know, if we just get back into that fair value gap, it didn't even hit that. Like, where's my right there? See how we just shy of it? That was 542. The high of this candle is 541.25. So it was 1.25 handles above it still before you even hit that fair value gap. So we're still inside here, and we're still inside that fair value gap discount box. We're just working the snot out of it right now. You added back in for a short? Well, you're bold, Ollie. You're a bold man. All the time she's staying below there. That 494. I like it. There's lots of confluences in there. The 6 a.m. candle, the midnight open range. Oh no, there's right there, open range. The 6 a.m. candle, banging off of that. Nice. And you're below the 494 on a close. Let's look at this here. Where are we inside this range? We're already hit 50% right there, just right above it. Hit it again. 62% will just put us back in here. 70% will give us a full fill of this. 75 gives us back into the breaker. 70 puts us right inside the breaker. So you might see an optimum trade entry reversal here. So look for that right there. There it is, tap. Now you come back down. If you keep running through it. Have you guys ever seen, this would be the Scott Sterling trade. Derek's Scott Sterling keeps getting, have you ever seen that one where the guy's the soccer, Scott Sterling is the football player, he's the goalie, and he keeps getting, they're trying to end the game, and they've got to do a kickoff at the end, like a goal scoring, and he goes into goal, and he just keeps getting hammered in the face over and over again. He keeps saving the ball, and they win the game, but Scott Sterling does it with his face the whole time, doesn't even realize it, and they drag him back out onto the pitch, and in the end, he's huddled up in a ball in the corner of the net, and the guy kicks the ball like in a wide open net, and Scott Sterling lifts his face up and still gets shot in the face. It's hilarious. This is the Scott Sterling play. Just when you think Derek's out, he keeps saving it, so we can get back through this 70% range. Scott Sterling is still alive. You guys got to watch it. Look it up on YouTube. I laughed so hard. And then there's a Scott Sterling volleyball player. They keep spiking it, nailing him in the face over and over again. And he keeps protecting his side by his face. Oh, it's just mental humor. It's dark humor, but I love it. I think it's hilarious. Okay, so I like these equal highs. We're back inside that midnight open range again. And right back into that first fair value gap in the midnight open range, which is right inside this breaker's open. We're through to 70%, 75% now. Now this is looking hopeful. Now this could be, I'll forget this right now. Derek is awake. His eyes slap his cheeks. He's awake. We're back into this breaker. Now, do we roll over and come back down, or do we start to just eat our way into this order block's mean threshold, give it up, come back, tap it, take that high, support it, and then we're back into Derek, cheering Derek on again. This lower first presentation fair value gap, 3 attempts to get down there, failed, found support at the 830. I keep going. Come on, Derek. We want this to work for you, man. Maybe out if it gets back to the equilibrium of the 5-minute range. Yeah, you don't want this to turn into a bull trap off this breaker. But this looks good. If you can come back and find support here and start pushing higher before this gets taken, because you've taken this high, you've got a fair value gap forming. If you trade below it, come back into it, then I'm looking for these two little imbalances below us. And if they give way, then we're back into running the lows again. That this was just a deep retracement back into the breaker, into this imbalance, and tap this old breaker. You got breaker overlap. Yeah, you're through it already. Discounts already. Mean threshold. Now I expect to see it stop here, roll back into this small area here. And then push lower. You've got this BISI here, hasn't been tapped yet. Premium BISI. Sorry, premium SIBI. Premium BISI, discount SIBI. Hit. So box to box if we can get back up in here. Trade below, come back up inside. I want to see it come lower. Gotta get through that level. 487. 487. Angles. There we go. There we go. Your stops at 509. Did you get it? Oh, you just denied it. 506. Jeepers, look at that mess in there. How do you make any sense of that mess? You look at that and you go, I'm staying out of that. But that's definitely a practice. For those of you who are really advancing your analysis, this is great practice. Look for all these specific arrays inside this chop. And it is some serious chop there. should go. Oops, it doesn't go. Still working inside this discount, inside the range, the discount box, and this little discount box here. You can almost include that as well. There. There to there. So we've traded below this level. We've come back into that level. I want to see this mean threshold give way. We've wicked into it a couple of times already. Now I want to see it pop through here. Right to it again. Let's pop through, come back, find some support at it, and then take these lows and reach for these lows down here. There you go. See how you pop through it now? So we can get back to 1 right here, 2 right here, 3 right here, right there. And I'll stop, go back down. And see how that's a sensitive point? Now let's go back down. Let's go, man. I'll take the lows. Now precision is that you don't want to see it even so much as wick above that precise spot we just called right there. Now I want to see that just keep coming low, take these lows. And the next data point is right there at 474. Pay yourself as soon as that low gets taken. And then move your stop loss to a regular. Like I'm saying, if you were in that, so you're just thinking, if you're just practicing demo, you're not even thinking about these buttons. You're thinking, okay, I enter in here and that's it. I do not, my stop loss will be right up close to that now. I don't want to see it revisit this. Sorry, this right here. I want to see these lows get taken now. So that level right there, that's it. I don't want to see it go through there. And if it does, then you move to the sidelines and wait. You're literally a fraction below. See, the high of that candle is 84. High of this candle is 83.75. The spread would have got you. But we're just looking at precision right now. Still below it. Looking for these lows to get taken now. So you could go below your equal lows. These ones here, oh yeah. Yeah, the potential is to run down into this looky here spot. That looky here spot was the, where's that? What was I looking at here? Oh, we still have this regular trading hour gap at 456 to get filled yet. That could be the lunchtime run into filling that regular trading hour gap, and then see a turtle soup from here. No trades from the middle. Don't diddle in the middle. Don't fiddle or diddle in the middle. Mean threshold. So you're back through this level again. So I've lost my love for this going lower. You're back through that mean threshold. Now I'm looking for a run back into this premium box. We get a body above here, look for this, and then get a body above there. Look for a run back up into this guy here again. Done for the AM session. Need a break. We'll nail it this afternoon. Stay safe. Thank you, Darren. Have a great day, everyone. See you later. Adi, have a good one, man. This is a super choppy day this morning. I've already got about another 15, 20 minutes left in me, and I'm done. I'm going to get a great clips haircut shortly. Stay in the trade, pay the trader. See you all. More humor this afternoon. I hope it turns around for you, Derek. If you're still in it, man, I hope you get your call. You may. I just totally think that we might be able to get you back up there, man. Didn't even get 50% of that. 62% on that one. And 79% on that one. We got lots of equal lows here, lots of equal lows here. I still think lunch is going to take a run down there. Oh my goodness, tired. It's going to be a walk off. Man, I'm so rooting for you, Derek. I'm so rooting for you, man. Walk off win. I love it. Ah, look at that. We're above here. The little breaker that takes out that low. We've traded above it. We've come back inside it. Come on, Derek. Let's go. Let's go. Manifest your destiny. Come back, give this a little tap. Keep going. Runs higher. Look for this candle. Not high. Then look for this breaker here. And premium box. The next breaker. I think that's going to be it for me, you guys. We got a small crowd now, and I think I'm done. It's still going sideways, so wait for afternoon. 1:30, 2 o'clock. Look for a big run. Don't forget we could still see a run below these lows here for 12 and a turtle soup time, and then we get Derek his money at 542. I just flipped the bat and I'm strolling to first, heading for a haircut. Only the doubters still wonder what the end result will be. Come on, Derek, man. I want this to win so much for you right now. Let's get back up there. Yeah, I think that's going to be it for me. Keep an eye on that. I'll celebrate with you, Derek, in the Telegram channel. If your trade, or when your trade pans out, we'll high five in there, man. But until tomorrow, thank you very much for tuning in. Thanks for the thumbs up, the likes. I appreciate it. It's all appreciated. And thank you for tuning in. If you're new to our channel, subscribe. We're here every day. We're here to help you out, understand price action a little cleaner. If you're an ICT student that you want to improve your skills and you want to get really tight with your understanding of the price action and the algorithm, pop into our show every morning, and we're happy to help you out. So and as usual, much love to my friends out there. Thank you, thank you, thank you. I appreciate you all. I respect you all. Thank you very much for your time. And I will see you guys bright and early tomorrow morning. Or I'll see you in the Telegram channel this afternoon. Thanks.